We're going to talk about reconciling a bank statement. Now, when you get your bank statement, it doesn't match your books. You can take your bank statement, compare it to your books, look at the two, and they won't match. But that doesn't mean necessarily that there are errors on either one. Now, of course, there could be errors, but it doesn't mean that there necessarily are errors. We could have what we call timing differences. For example, you may have written a check. It hasn't had time to get to the person you wrote it to or the company that you wrote it to, and then back to their bank and back to your bank for the bank to take it out of your account. But you've already taken it off your books. So, a lot of those differences that we find are timing differences. And when we reconcile our bank statement with our books, what we have to do is find all the differences, whether they're errors or timing differences. We have to find all the differences and then reconcile those. So I'm going to show you first how to look for those differences. We're going to assume here that we have a bank statement from a company, and we're going to look at various pieces of this. What we have right here is the cash receipts on our books. We have the cash payments on our books. We have our cash ledger account. Notice its balance is $14,941. And we have a bank statement here. And this bank statement's balance is $17,069. So you see that there's a difference between the books and the bank statement. First thing we need to do is pick out our differences. So what we'll do is look at what's on the bank statement, and we'll find out if these same things are on our books or if they're not. So let's look first at the deposits and other credits. On March the 1st, there's a $625 EFT. EFT, of course, is electronic funds transfer. Well, that as a deposit should be on our cash receipts if we have recorded it on our books. But if we look up here at the cash receipts on our books and we look at those, we don't find $625. Here's all of our cash debits or cash receipts. And that isn't on there. That's because the banks put it in our account. We have not gotten it on our books yet. So we want to mark that as a reconciling item. Then the bank shows a deposit of $2,716. Let's compare that with our books up here. Yes, there's $2,716. It's on our books. It's on our bank account. I've checked both of those. Now, you can use any system you want to of checking the two against each other and making sure that you verify that one's there versus another. But I use check marks if they're there, and I circle if they're not. So all my differences will be circled, and all my things that are likely check marked. Okay, then the books had $544 deposited. Let's see if the bank got that deposited. Yes, there it is, $544. Check both of those off. Then according to the bank statement, there was $1,655 deposit. Did we get that on our books? Yes, we did. There it is. So that was deposited. We show on the books $896, a receipt. Do they show it on the bank statement? Yes, they do. Then the bank statement shows $367. Do we show that as a deposit on our books? Yes, we do. The bank shows that, or we show $890. Does the bank show $890? Yes, it does. So all of those match. So I've checked all of those. All of those are okay. I don't have to do anything with those on my reconciliation statement because all of those are taken care of on both the bank and the books. But then the bank's showing a $1,000 BC. BC in this case is a bank collection. So the bank has collected $1,000 for us, put it straight into our account. Do we have it on our cash receipts on our books? No, we don't. So there's a reconciling item. And then we have a $2,038 receipt that we're showing on our books, and the bank does not have that on our bank statement. So there's another reconciling item. So in our deposits and receipts area, we have identified 3 items that don't reconcile. This $625 electronic funds transfer, this $1,000 bank collection, and this $2,038 that we have on our books that's not on the bank. So those are reconciling items. Okay, now let's check our credits to cash, our cash payments. There's our cash payments. We want to check those against our checks and other debits on the bank. All right, the bank has a $441 NSF. NSF, of course, is non-sufficient funds, which means that we had deposited a check and it didn't cash because our customer didn't have funds in the bank. So we want to look and see if we have taken that off of our books, and no, we have not. That's a reconciling item. I have it circled. Then there was a check, cleared the bank for $465. Did we in fact write that check, $465? Yes, we did. So that one reconciles. We wrote a check for $1,004. Did it clear the bank? Yes, it did. Right there it is. The bank's cleared a check for $450. Did we actually write that check for $450? Yes, we did. There it is. We're showing that we wrote a check for $8. Did it clear the bank? Yes, it's cleared the bank. There it is. Okay, let's check our other checks. We wrote a check for $775. Did that check clear the bank? Yes, there it is. But notice between the $8 and the $775, there's a $340 EFT, electronic funds transfer. We don't have that on our books as a credit to our cash. So that's a reconciling item. So I've circled it on the bank statement. Okay. The bank statement also shows an $88 check being cashed. Did we write a check for $88? Yes, we did. Then the bank shows $216 check that was cashed. And we're showing $126. Kind of sounds like we might have a transposition there. So let's circle that $126. Because if the bank cashed a check for $216, that sort of indicates that the check was written for $216. So we must have an error here on our books. All right, then we're looking at a check for $970. It didn't clear the bank, so there's an outstanding check, so let's circle it. Then we have one for $200. It didn't clear the bank, so that's an outstanding check, and we'll circle it. And then there's another one for $2,267, a check that we wrote. It didn't clear the bank, so let's circle it. So we have 3 checks that we've written that have not cleared the bank, so those are outstanding checks. We'll need to use those as reconciling items also. Now that's all that we have on the books. We've accounted for everything there. We've either checked it off as being cleared the bank, or we've circled it that it hasn't cleared the bank. Now let's see if there's anything else that the bank took out of our account that we don't have on our books, and there is. There's a $25 SC. That SC is a service charge. So the bank charged us a $25 service charge, and that service charge is not taken off of our books yet. Okay? So now we've picked out all of our differences, and for all these items that need to be reconciled that are not outstanding checks or deposits in transit or something that needs a little more explanation, we've got some explanation right here. So some of those things, it tells us what they are. For example, it says down here, the EFT deposit was a receipt of rent. The EFT debit was payment of insurance. And B says the NSF check was received from a customer. So a customer had written us a check in payment of something that we had shipped them, and their check did not clear the bank. It did not cash. Therefore, it's a reconciling item. They still owe us money, so that's what it was for. Then it says the $1,000 bank collection was for a note receivable. Somebody owed us money on a note. Instead of writing that check to us and sending it to us, they sent it directly to the bank, and the bank put it into our account. Now that was good for us because it got to our account sooner than if it had come to us. So the bank collected that for us, did us a favor, and put it straight into our bank account. Okay, then D says the correct amount of check 1419 is $216. We mistakenly recorded that check as $126. So we have an error on our books. The bank cashed that check for the correct amount. It was written for $216. The bank cashed it, and the money came out of our account at $216. Correctly so. But when we recorded it on our books, we recorded it at $126, which means that we didn't take enough off of our books. We need to take some more off of our books in order to make this balance. Because that check was written and cashed in the correct amount, we incorrectly recorded it on the books. Now that was a true error, and sometimes there are true errors that happen, and those have to be accounted for on the bank reconciliation also. So that's how we pick out the differences between what we've done on our books, our cash receipts, our cash payments, and our bank statement. So that's the first step. Now, a lot of times in your textbook, somebody will have already picked out those differences for you, and you won't have to pick out the differences, because a lot of times you'll be given a list of the differences and the things that have already been done. And if you have that, that simply means that somebody has already done that initial work for you, the checking the books against the bank statement, and to pick out the differences for you. That makes it a little bit easier because you've got a list of what the differences are, and then you can just go straight into reconciling your bank statement without having to pick out those differences. So this shows you where the differences came from, and then if you're working a problem in your textbook, many times those differences are already picked out for you, and you can just start reconciling your bank statement immediately without having to pick out differences. So that shows us how to pick out the timing differences, not errors, timing differences, those things that have happened either on the books or on the bank statement but have not had time to get to the other place, and those true errors, things that have happened that are really errors on the books or the bank statement, one or the other, and we found those and have to reconcile them. So that's our lesson in determining what needs to be reconciled. In part 2, I'll show you how to do the bank statement.